everybody, welcome back. We're going to talk about Bitcoin and this death cross, which is coming on the weekly. I've seen a few people ask about it and whatnot, so we might as well address it. Despite that, though, looking for a small-time pullback, just ever so slightly small-time pullback. Based on the weekly to start with, we're getting a pullback on the 10 exponential. You'd expect that in a trending move. The trend being down, you'd definitely expect that. And we've spoken about what major bottoms looked like last time, and they basically started with attempts to reclaim this 10 exponential, and only once it had been reclaimed did we. Well, I was particularly interested in this being a period of accumulation, and then once you get above your 21, then you're more or less good to go. I mean, it's oversimplified, but that's what we're talking about. And to be honest with you, this was why I was getting particularly excited previously when we came out of this giant descending triangle formation. Just treat this as a major resistance, bang, bang, and then we sort of crept out of it quite dramatically above the 10 exponential and then moved up to what was the FTX situation. So we seem to be looking to repeat the same kind of behavior, sort of attempting to get to 10 exponential rejections, see where we go from here, attempt to get to 10 exponential rejection, see where we go, rejection, and see if we can get above it. So, as far as momentum's concerned on the higher term timeframes, I kind of like it, really. It's not all that bad. Again, looking at the Euro, which I'm not going to bore you to death with because it's the same old, same old. It's a bullish chart, but we want pullbacks. Pullbacks probably be about 2 to 3% thereabouts. At some point within the next couple of weeks is my expectation. It doesn't have to happen today. It doesn't have to happen this week. But I would be looking for a deeper retest to prove that it's a bullish chart. Now here we go for Bitcoin again on the daily. We're above all major moving averages outside of the 200 simple and exponential, which is all the way back up here into the 19,500 and the 21,200. Right, so just keep those price targets in your head. The main target we're looking for is to re-enter this box of 18,000 to 18,500, which is the previous box of significance, we called it, where we were getting supported above there, and things were looking good. If it wasn't for FTX, we'd probably still be above there now. And again, just to point out that the momentum on this is good. We've had bullish divergence leading into this move. We've got creeping up above the 0 point now on the daily for the MACD. Again, it'll take a few days. You can have pullbacks and still continue with this general vibe of momentum. Looking pretty good. And again, if we just move it over to the 4-hourly, this is where things are getting really interesting as we've finally got ourselves a golden cross on the small-term timeframes, which also, as far as I'm concerned, wants to be retested. Doesn't have to be retested today. If it comes down to this level, that's 16,950. Again, it can happen today, tomorrow, next week. It can happen at any point, really, but they generally get retested, which is what we're looking for. As do death crosses. So I'm just going to talk about this death cross. It's never happened before. It doesn't have to mean the end of the world because we've got nothing to go by on Bitcoin. It's never seen a death cross on a weekly. It's not an old enough chart to receive a death cross on a weekly. Not really. But if we were to get a death cross on the weekly, just like you get bullish golden crosses on other time frames, it's very common to see retests of them. Right, so I know it sounds silly when you say it, and death crosses aren't signals in themselves. They're normally, they are strengthening of a trend. Weeklies are so lagging that it might not be something we should really hold on to too much. But a lot of the time when you do get a death cross, just as you get with the golden cross, you get a retest of it to see if it's genuine. Now, we look at golden crosses frequently on the channel. 4-hourly golden crosses have happened many times just in this in this bear market. We see them all the time. And we always expect to see them get retested. And we don't expect them to hold, although there's a good chance that they will. We expect them to get retested to see if the trend is genuine, to see if it's going to keep going in that particular direction, because it doesn't have to. And again, backtest it just from looking at the YouTube channel. I look at golden crosses all the time, and again, I treat them as a strengthening of trend, but I also am skeptical when we come down to retest them. I don't buy the actual cross itself. I buy, or maybe even short particularly, the reaction on it, which is what we'll be looking for, what I would be looking for if we get this death cross. Now, if you don't know what the death cross is, I'm sure you know. We've got two coming in. We've got the exponential death cross, which is the green crossing the white. We've got the simple moving average, which is this purple crossing the the yellow. So if we can just, and again, you're not really supposed to do this really because they are just an extension of price action. But if we just extend the general direction and trajectory of these crosses, we can mark off kind of, and again, this isn't really what you're supposed to do, but we can kind of mark off where they're going to happen. So the first one would be, oh, it's a right mess now, this, isn't it? So what we're looking at, the first one will be an exponential death cross, which is what you'd expect to see first. And that comes in around 13th of February. Hopefully that's not a Friday. But that's when you generally get. You'd get that at this current direction, that's what it looks like when it's going to happen. And again, it doesn't have to happen, but it probably will, to be honest with you, because the only way to avoid it would be for price action to really rally above those moving averages pretty dramatically and sustain price above there. The next death cross would be the simple moving averages. Have I got this right? So that's your exponentials around 13th February. The next one would roughly be not too much longer after that, around 27th of February, so just after February. So we're not looking for these to happen for about another 4, 6, 8 weeks or so. And if they do happen, it's not initially the most bearish thing you've ever seen. We could easily see a rally into these levels, a retest of any one of these levels, and then that's it. And then we come back down from there. And it also doesn't have to make a new low, although I probably would say it's likely that it would. Now, we can look on something like the S&P. In fact, we'll look at the Nasdaq composite here that we've got. And we do have examples of death crosses that have failed and some that have worked out. Now, the ones that have worked out from what I have seen, are the ones that have been formed in extreme conditions, extreme stress. But first, we'll look at one that did happen, which didn't have continuation. So back in 1990, we got a death cross on your simples and exponentials all at the same time. And we did have a pullback as a result of that. There's your peak, and there's your low. Fair enough. We pulled back into the center of the Bollinger Band. Effectively, the low was already in, and at that point, we rallied on, and we rallied on, and we rallied on, and we rallied on, and we rallied on. Until we finally found ourselves a bubble pop all the way up here, 2000. So your .com bubble, and then what we saw is we did get a bear market, a long sustained bear market. Similar, I would say, to what we're seeing now, but not quite, but similar, same kind of idea, I suppose, that went into this, parabolic move, and then. Everyone getting wrecked. So similar, not the same, but similar. So what are we looking for now? Okay, we're looking for death crosses over here. So we got one over here on the exponentials, and then shortly after that got one on the simples. Okay, so if we just think about the first one, exponentials, I normally would think exponentials would probably be better. We then came down over the space of another 1.5 years to the tune of 50% more or less before we found the low. We did find other death crosses as well in March crash. And again, you can't really look at this and say it's too much to do with the chart. As we all know, this was born on the back of a pandemic. So yeah, we got this. It doesn't really count, to be honest, does it? We came straight out with a V-shaped recovery. So there's not much really to backtest, and there's certainly nothing to backtest on Bitcoin. So we've got two examples here. One natural, which was basically a red herring, kind of the low was already in. And then the next one, which was in the middle of a giant bear market, which did have continuation to 50%. So if you put that in summary, that's a 50-50 odds, isn't it? So 50-50. Is the death cross going to have continuation, or is it going to is it going to be a load of nonsense? As far as we can see here, and again, we've got nothing to go by other than Nasdaq, which is the most similar, I would say, of anything to do with Bitcoin. We would say, all right, fine, there's a 50-50 chance that it could work and mean something, or a 50-50 chance that it will continue and blah, blah, blah. I think the most thing that the thing that I would take away from all of this is that whether it does or doesn't have continuation, it most likely has a retest of it, which means upside before downside. So if I see a death cross form on the weekly, I would probably start to see loads of other YouTube channels going on about it. Death cross on the weekly, death cross on the weekly, never happened before. Death cross, go to Wreck City, go to Wreck City. It will probably have some kind of reaction because of all those doom boys that are latching onto this, death cross, whatever. But from a technical perspective, on a weekly as well, because weeklies are so lagging, and we all know that this bear market is largely a 4-year market cycle bear market, which is fine. But also on top of that, we've got a general economic problem, haven't we, with inflation high and liquidity being pulled out of the system. So there's two aspects to this bear market this time around. And so we know that there's fundamental reasons driving the downside, which means that that can change. It can change. There are people who are in control of this bear market, if you want to put it like that. Organizations, central banks, basically. Who are in control of the bear market. You know, it's a man-made bear market. They're not going to want to crash the economy. I don't believe they would. Why would you? There's reasons you might think, you know, that sinister, you know, behind the curtains reasons why they might want to do that. And yeah, that's fine. But also, they certainly don't want to. Because in my opinion, you know, whether or not you're into all this Illuminati or whatever, I'm sure there's elements of that in real life. But when it comes to a country, the central bank of a country, they don't want to destroy an economy, all right? Not when you've got other powers that be sniffing around you, you know, gaining power bit by bit, you know, like China, emerging powers. You do not want to be crashing your economy at this time. You crash your economy when you can afford to crash your economy. Okay, you don't do it now. Anyway, I've gone down a little bit of a rabbit hole there. Or should I say I've climbed out of a rabbit hole? I don't go down rabbit holes very often. But yeah, so back to the Golden Cross. If anything, a Golden Cross, temporarily, I would say, has a very good chance, a reasonable chance of a bullish retest of, well, a bearish retest of that, which basically means upside, up to and into the $20,000 zone. Anyway, I will leave it with you there. Downside, I reckon, is most likely for the day, although that's not sealed in, not quite yet. Focus on the euro as always, and it's the repercussions on the Dixie. But basically, charts are working out quite nicely at the moment. So let's not worry about this death cross. If anything, let's keep our eyes on it and wait for it, and potentially get excited for it. Coming up to retest those moving averages, are where I'd be looking to get a little concerned and scared, but if we power on through, excellent. It means it's one of the two death cross scenarios, which basically leaves us with a 50-50 chance of continuation to the up or to the down. Anyway, I'll leave it with you there. Thanks for watching. Hope you have a nice day. Take it easy.